at Maruti Suzuki, but let's get into conversation with Deepak Shenoy, CEO at Capital Mind Mutual Fund. Deepak, hi, good afternoon, and good to be chatting with you this afternoon. We've been talking about auto sales and how autos have seen a renewed momentum after the GST rate rationalization. Your take on the sector, any specific stocks or any sub-pockets like CVs, PVs, two-wheelers, four-wheelers, how would you place your bets here?
I think we can't talk stock specific, but I
Sure.
think we own, a stake in the auto industry in general. We have players here, but in general, I think it's been good, 25-30% in two of the larger names, and we are seeing that increase, I think, coming on the back of two things: the GST rate cut, and also I think the changes in some of the downstream activity that's happened. It's been a year. In fact, it's been 4 or 5 years since we've seen meaningful pickup in PV, and the last year has been quite some of cheer. This GST rate cut, the bigger cars at least the prices come down quite substantially. So I think a lot of the sales of September would have gotten pushed into October. So as we see November data, when there's not the festive push and also the GST rate cut, the September month backlog piece would have gone away. The November data will be more revealing. But I think, to a large extent, the PV market is the bigger play here. It seems to be. And the two-wheeler market benefits, but relatively speaking, it's not as big. So we'll have to see how those numbers also pan out in November. The CVs, I think, will still take some time. There is some part of it related to more capex, and that's not really meaningfully happening right now. It probably will take 4 or 5 months more.
Deepak, hi, afternoon. Let's talk about what's happening within the primary markets, though. I mean, Lenskart, irrespective of all the acquisitions around the high valuations, does get fully subscribed on day one itself. And look what's happening in Oyo Rooms now. And, of course, many others wherein the grey market premiums have halved.
Yeah, I mean, Aisha, I think, there's a lot of conversation around IPOs and who should buy and whether we should, buy and not buy and all that. But I think to a large extent, these companies are new, so we don't know much about them other than what they've revealed in the prospectus. We will find out about the financials only 1 or 2 quarters after they list, how they behave after they've listed. Are the profits sustainable? Are they creating value? All of that stuff will be visible only a little bit later. One of the problems with some of the funded companies is that their biggest investors tend to want to exit after that first 6 months when they're locked in of sorts. Then you find that many of these stock prices seem to dip in that 6 month to 12 month period, or first 1 year kind of period. So you have enough time, so you don't have to rush and buy them right now. And to that extent, I think we'll have to see how this performance kind of pans out. And gray market premiums, unfortunately, are their functions of sentiment, and they change quite rapidly, and they don't really indicate what will happen, say, a month or 2 months after the stocks list. They're pretty much geared on listing day premiums. It's kind of a black market of sorts for for the IPO listing pops. So I'm not so focused on them per se, but it's nice to see that people are interested. There are diverse opinions, a lot of discussion, a lot of anger and unhappiness by a lot of players. All that is good discussion, because such stuff should come out. But I think the real thing will only come over time. So we'll have to wait for 2 quarters at least before we see some value being created.